Hello and welcome to another episode of Stock Talk. Today, we're covering a very exciting new company that some say could rival Tesla over the next few years. Now, I know that may sound a bit far-fetched, but I will tell you why it's not in today's episode. So, without further ado, please be sure to click like and subscribe to my channel below to stay in the know. Alright, as promised, let me introduce you to Chinese electric vehicle manufacturer NIO. Established in 2014 and headquartered in Shanghai, this 6-year-old company already has a presence in Hong Kong, the UK, Germany, and even the US. Investors in the company include big names such as the Chinese multinational conglomerate Tencent and hugely reputable American venture capital firms such as Sequoia Capital and TPG Capital. Though not without its challenges, NIO has made incredible strides over just the past few years. These challenges, along with the successes and potential opportunities in the market, is what could make this company another value buy. Why? Stay tuned and find out. As early into its life as 2016, NIO secured an autonomous vehicle testing permit from the California Department of Motor Vehicles. But this wasn't your run-of-the-mill autonomous driving test permit. NIO secured a Level 3 and Level 4 autonomous driving permit. Now, what does this mean? There are 6 levels of vehicle autonomy. Level 3 cars have what is called environmental detection and can essentially think for themselves to the extent that human override is needed if the car cannot ultimately execute the task it determines it needs to do. Level 4 automation actually makes the car capable of executing tasks and correcting itself in the event of failure. To put it into perspective, Audi became the first auto manufacturer to deliver a Level 3 car, their A8L flagship, in Europe in 2019. To put it into further perspective, Tesla has only reached Level 2. This is where we, and also various Wall Street analysts, see the opportunity with NIO in its development of autonomous driving technology that is narrowing the gap with Tesla. NIO calls its AI Nomi, and it boasts it is the first in-car AI system. And the innovations do not stop there. In August of last year, NIO released its claim to fame BaaS infrastructure. BaaS stands for Battery as a Service. Instead of relying solely on a network of charging stations, owners are able to swap out old batteries for new ones, something that Tesla attempted but never ultimately implemented. On a full charge, a NIO automobile is able to run for 310 miles with premium models hitting 435. Compare that to the average electric vehicle's 181 miles. It's right on par with Tesla, whose vehicles range from 244 to 520 miles. BaaS actually lowers the purchase price of a NIO by 25%. Now, like with any growth company, there's no such thing as a perfect ascension story. In April of 2020, NIO had to take $1 billion of Chinese funding in order to backstop very sluggish sales growth due to recalls, layoffs, and as we all know too well, the COVID-19 pandemic. It has since rebounded. Currently, NIO has 193 battery swap stations and 134 charging stations, and it offers 4 models, 1 exotic sports racing coupe, and 3 SUVs, with 4 new models in progress. As of April 7th, 100,000 NIOs have been produced. Now, the name of the game is perspective. It took Tesla 6 years to develop just one model. NIO has surpassed that in a fraction of the time. And pricing is fairly comparable, with models starting at $52,000 and topping $68,000, with the only exception being its exotic sports cars at around $3.5 million. And to top it all off, NIO has announced this year it has begun expanding into Europe by way of Norway. I'd like to take a moment to ask you a question. Based on what you have heard so far about NIO's ability to produce cars within just a few years and starting to pioneer its own technology as it solidifies its global presence, do you see it being a serious contender to Tesla? Do you see NIO overtaking Tesla if it enters the US market? I'll let you know our thoughts. But first, if you like what you're learning, hit that like button for me and leave me a comment with your thoughts below. Barron's reported back in February of this year that, and I quote, entry to the market by a Chinese player would be a game changer for the entire US car business. These were actually the findings of a Dutch bank analyst who found a now-removed NIO job posting searching for someone to, and I quote, formulate an action plan to enter the US market. Now, the Dutch bank model doesn't account for NIO sales in the US to begin, not even in 2025. Now, whether or not NIO enters the US today or tomorrow isn't our primary concern right now. Our primary concern is the opportunity in its innovations and how it plans to take on the competitive landscape. But first, why don't we take a look at the stock itself? Analyst sentiment is actually very mixed, but on the positive side, let's dig into the company's financials first. The bottom line is that the bottom line remains negative, pun intended. But this is not unusual for a young growth company. And by the way, less negative is still better than more negative. But what exactly do I mean by that? Earnings over the past 3 years have been negative, with a whopping $23 billion loss in 2018, an $11 billion loss in 2019, and finally a $5.6 billion loss in 2020. Things are finally looking up, so to speak. This is especially considering that revenue growth has been very steadily increasing over the same amount of time. At some point, revenue will eclipse losses and deliver earnings in the green. In 2020, revenue spiked from $4.95 billion in 2018 and $7.82 billion in 2019 to an impressive $16.26 billion in 2020, and year-over-year quarterly revenue growth increased at 481.8%. But the stock is still well below its January high of nearly $62. Why is that? Well, if you've been able to follow the markets, you'll know there was a rotation away from growth stocks and into value stocks in March. Not to mention the stock itself is fairly volatile, with a beta of 2.53, meaning it moves almost 3 times as drastically as the market. And since then, NIO has missed its last 2 quarters' analysts' earning estimates by 33 cents and 9 cents, respectively. Earnings per share is currently negative at negative $1.04. However, both technical and fundamental analysts are still bullish on NIO. As a matter of fact, they just can't agree on how much more it will increase. And here's a little more perspective for you. As of the first quarter of 2021, NIO's market cap surpassed that of Ford's, reaching $50 billion against Ford's $46. What do you make of this? Do you think this is significant? Be sure to share your thoughts with us in the comments below. Technical analysts are looking at the trend lines in NIO's price movements. They've noticed a bullish pattern, meaning that the current price of the stock has already crossed the simple 50-day moving average of $37. When that happens, it means that upward momentum has been confirmed. But we are not all about market timing here. While technical analysis can provide good insight, it's not the full picture. Let's look at what the fundamental analysts say. As of June 1st, Citi upgraded its rating to a buy, citing an expectation of increased demand for electric vehicles in China. Citi expects a 50% price increase. 63% of Wall Street analysts agree with Citi, with some analysts expecting a 35% increase, while the market is actually implying a 59% increase. Livy Investment Research, an ex-auditor at a Big Four accounting firm, actually sees NIO hitting 160 by 2025, as it leverages more of its autonomous driving technology on a global scale. MarketWatch from Dow Jones classifies NIO as a momentum stock, citing chatter that it can become the next Tesla, which makes sense considering that it is reasonable to expect Tesla will not be the only EV in the future. As it stands, NIO shares gained 900% over the past 12 months. Tesla shares have gained 324%. But NIO is new. Tesla has a much longer track record. Do you think that NIO will be able to keep up its momentum and match Tesla's 1,028% increase over the past 3 years? Or its 1,444% increase over the past 5? Let us know in the comments below. Let's get a discussion rolling here. This past May, NIO delivered 6,711 vehicles, representing 95.3% year-over-year growth. On a cumulative basis, that's 109,000 cars since the company's founding. As impressive as that is, that was still 5.5% less than its deliveries in April, and NIO is still reiterating its second quarter guidance of 21,000 to 22,000 cars to have been delivered. Now that's a challenge for sure because its highest record was in June at 7,225. To meet its own guidance, it would have to produce over 8,000. Should they miss their own mark, they'll undershoot earnings estimates again and likely create another buying opportunity. The reason for the relative May decline highlights a risk the entire world has been recently exposed to, and that is the global semiconductor shortage. The auto industry has been amongst the worst hit, and China and the US are working hard to achieve semiconductor independence from Taiwan. This is likely to remain a business risk in the near future, and likely to drive earnings. That said, since NIO has been working on AI since 2016, it has partnered with Mobileye, or Intel's IQ proprietary semiconductor chip, to continue developing its Level 4 autonomous driving technology. This launch is expected in 2022 and will come in the form of ADAAS, or Autonomous Driving as a Service, which will be a monthly subscription for owners, once more rivaling Tesla. It already has a proven sales record in China, known for its modern and luxurious cars, and by 2022, NIO is targeting 4 stores in Norway along with a full charging map for Europe, a much more realistic expectation than risking direct entry into the US, whereby in Europe it will benefit from its high density of countries and relatively open borders. This will allow the company to grow and mature prior to any rumored post 2025 US market entry and get a stronger hold in a market where Tesla has a relatively limited presence, as opposed to the US, where Tesla is already the EV king. Even in China, as it stands, NIO has renewed its contract with its joint venture partner Jingguai Auto, JAC, which will boost its annual capacity from 100,000 to over 200,000 units. Compared to its competitors in China, Li Auto and XPEV, NIO's technology, revenue generation, and global footprint are already superior. Electronic vehicle technology has ramped up significantly, and barriers to entry have decreased. Price parity with gas-powered cars has been achieved, and even traditional car manufacturers have started to produce battery cars. But China itself is one of the largest EV markets, representing more than 40% of EV sales in 2020 alone. According to the December 2020 Autonomous Cars Global Market Opportunities and Strategies to 2030 277-page report, the autonomous car market will be worth $1.6 trillion by 2025, and NIO stands ripe to benefit. That's all for our show today, folks. Thank you for watching. If you liked what you saw, please show us some love by clicking like and subscribing to the channel.